Hi everyone. Kohls reported first quarter earnings that sent the stock price up as much as 15% before coming back down a little bit. That has a lot of investors asking if it's too late to buy Kohls stock. So in this video, I'm going to review the big picture highlights from Kohls earnings results, and at the end of the video I will answer if it's too late to buy Kohls stock. So right into it. So sales decreased by 3.3% compared to the same quarter last year. However, earnings per share of 13 cents was an increase from 11 cents in the same quarter. Inventory, which has been a big story among brick and mortar retailers, of 3.5 billion was a decrease of 6% year over year. That wasn't that big of a drop, but Kohl's inventory problem is not as big as some other companies in the brick and mortar space, namely Target and Walmart, have bigger inventory issues to deal with. Surprisingly, while all of these companies announced that they're going to undertake major promotions and discounts and incentives to get rid of all of this inventory, the discounting hasn't been all that huge. I mean, if you're a customer of any of these stores, you will have noticed the discounts have been mediocre at best. It's not like they've offered discounts that made customers say, wow, that's such a good deal, let's go out and buy some of this stuff. That hasn't been the case. It's just been mild discounts on some of these excess items, and customers are left underwhelmed. But the main part of these inventory reductions is coming from not spending money on refreshments. So these companies are not buying new inventory. They're just working down the existing inventory, and that's helping to raise cash and get rid of some of that inventory. So that's been a pleasant surprise for investors who were expecting the worst. They were expecting this huge competitive pressure from all of these discounts, which is going to bring down profits industry wide, which hasn't been as bad as feared, at least in the first quarter. Kohl's used some of its cash to pay down debt. It now has total long-term debt of 1.64 billion. That was down from 1.75 billion. That's ever more important now with higher interest rates. The ability to reduce debt is good news. Cash flow from operations improved to negative 202 million. This was up from negative 460 million. And like I mentioned earlier, the main reason for this is lower spending on inventory. The company spent a lot more cash on inventory in this same quarter last year than it did in the current quarter. It reduced spending on inventory significantly, and that helped preserve cash. Kohls is forecasting 2023 sales decrease of 3% at the midpoint, with earnings per share of $2.40 at the midpoint. Now, this earnings per share of $2.40 would still be considerably lower than the earnings per share of close to $4 and $5 Kohls was regularly reporting before the outbreak. Now, to answer the question, is it too late to buy Kohl's stock? And I will point you to this valuation chart I have here on the bottom. What I have there is the Kohl's forward price to earnings ratio, and I have the most recent figure at 7.061, and I have the figure going back all the way to early 2021. At the current forward PE of 7.061, Kohl's stock has never been cheaper according to this metric in the last 2.5 years. The stock is still inexpensive, and the bounce we saw as a result of these earnings results was just a slight rebound from the significant declines the stock has experienced over the last couple of years. So to answer that question, no, it's not too late to buy Kohl's stock. The stock is not too expensive by any stretch of the imagination when looking at this metric. So if you're interested in Kohl's stock, it's not expensive, it's not too late to buy. All right, but that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.